The Truth About Crypto by Ric Edelman. There are several ways for an investor to invest in digital assets. Welcome to yourbooksummary.com. How can you make money from the revolution in digital assets? Here are a few strategies investors are using. Mine coins. One possible way to take advantage of the digital assets revolution is by mining coins, but it requires technical expertise and a significant investment in mining rigs. Solving complex mathematical problems allows you to earn coins that may be appreciated over time. This strategy can be profitable as long as the coins you earn from mining are worth more than your expenses. Invest in miners. Mining seems to have become more complex, and the most successful miners are now sophisticated companies. For instance, Riot Blockchain, a publicly traded company, reportedly spends around $15,000 to mine a single Bitcoin. If the price remains above this threshold, mining can still yield profits. A few other publicly traded miners also offer investors the opportunity to enter this market. Buy coins or tokens. There are many options to purchase cryptocurrencies, such as Bitcoin, Ether, and more. Numerous digital asset exchanges have simplified the process, enabling you to create an account and trade cryptocurrencies seamlessly. Some popular exchanges include Binance, Coinbase, Gemini, Kraken, and Robinhood. Farm for yield. One way to earn interest on your coins is by lending or staking them to others, also known as yield farming. However, it's important to note that yield farming can be a risky endeavor. Invest in blockchain infrastructure. Levi Strauss gained fame during the 19th century California gold rush not through gold mining but by providing supplies to miners. This same approach, the picks and shovels strategy, can also be applied to digital assets. Buy derivatives. One way to invest in digital assets is by purchasing options, futures, forwards, or swaps based on their future movements. However, it's important to note that this method can be risky due to the leverage involved in these contracts, which can amplify gains and losses. Buy Bitcoin futures ETFs. Investors who want to invest in digital assets can consider ETFs, which hold futures contracts on these assets, instead of directly owning them. Investors often prefer this approach because of the consumer protection of ETFs. Examples of such ETFs include the Global X Blockchain and Bitcoin Strategy ETF and the ProShares Bitcoin Strategy ETF. Invest in a venture capital fund or hedge fund. If you're looking for massive returns on your investment, it might be worth considering getting in on the ground floor of early-stage companies. Venture capitalists often reap the biggest rewards as they take stakes in companies before they hit the stock market. You could consider investing in a venture capital fund if this strategy sounds appealing. But be warned, the risks are significant. You'll have to lock down your capital for several years, not receive dividends or interest, and may face high investment minimums and fees. I hope you found the information about The Truth About Crypto by Ric Edelman. If you're interested in learning more about the book, stay tuned for the next part of this series where we'll dive into the next section. Thanks again for watching, and I'll see you in the next video.